Hi guys, welcome back to the Trading Den. Well, today we're going to be discussing how to draw trend lines like a pro. We're going to be doing that right here, right now. Now look, it is absolutely crucial, and I want to really make sure I get this message across. People think drawing trend lines is something that is unimportant and software does it for you, and they don't seem to grasp the importance of a trend. Why is drawing a trend so important? Well, look, I've worked across 7 trading floors in my illustrious career, and I can certainly tell you this, from every trading floor I've walked on, whether it be in Paris or in Canada or in the US or in the UK, on London trading floors, on US trading floors, on Japanese trading floors, and in Australian trading floors, there's one thing that I notice with professional traders when it comes to drawing trends that is dissimilar to your beginner type traders. Professional traders always draw trends on chart. That's how important it is. Traders are always looking for where the trend is. They're trying to identify first and foremost where the bounce points are, where the pullbacks are, where the phase 1 and phase 2 exists, so they can identify their entries and their exits. Professional traders tend to draw lines from the right to the left, whereas beginners tend to draw their lines from the left to the right. Now, before I go in and show you how smart charts solve this common problem, make sure you check out the link in the description to get yourself access to the very same trading platform I'm going to be showing you right now. Okay, so let's start. To draw an expert level trend line, we first have to define the time frame. If you look at the time frame I'm looking at currently, we always start with the daily time frame. That should be our overriding premise, and it should give us our trend direction and our bias. We should know if we're in a long market or if we're in a short market. We should always have a bias. So by looking first of all at that daily time frame, we should know if we're in an uptrend or if we're in a downtrend or if the trend has been reached. Now, at the time of recording, coronavirus is sweeping around the world, and that has had some pretty devastating impacts on the long equities markets, as you're probably well aware. Those people that have who are long only equities have had literally their pensions, their portfolios literally halved overnight, and we've seen it was not quite the impact of the 2008 GFC, global financial crisis, but if you look in terms of week by week drawdowns, it was nearly as bad in the same week by week comparison from the 2008 GFC to the coronavirus, which struck 2 weeks ago. So if I go to my chart right now, I'm just going to show you, this is the NASDAQ 100. In fact, if I look at any index across any market around the world, you'll see they've all been quite steadily trending upwards until about late January, early February of this year. And if you look at the current trend, looking at my screen right now, you can see markets, all equity markets were steadily buoyant. Things have been going well. We see what's been happening with the Dow. We see what's been happening in the futures market. Then all of a sudden, coronavirus hits, everybody freaks out, and equity markets come seriously tumbling down. Good news being that they have started to resume and they've started to bounce back. But knowing what our bias now is critically important as traders. Now, as long-term investors, this is where you have to put your big boy or your big girl pants on and just grip and hold on in there and hope things bounce back, which eventually they will. Okay, so if we look at the chart now, you can see the trend bias I had up until very recently was long market. People were buying equities, people were buying tech stocks. The NASDAQ 100 is the index of tech stocks in the US, and you can see that that was steadily trending up, hitting over the 9,700 mark, and now today we sit down there at the 8,500 level. And we now know the market's in a completely different trend. And the next step really is to zoom out of this daily chart to around 300 bars. So whatever market I'm looking at, I want a 300 bar range, and then I can examine the chart. Clearly here, you're looking over a year range. This is a daily chart, so I've at least got 300 bars. And then when it comes to drawing a trend line, and this is critically important because the purpose of writing or drawing the trend is to know where your bias point is. You must always have one. Now, we know very simply that gamblers and traders do very different things. Traders risk manage their positions, gamblers don't. Traders tend to have a bias, so they know why they're placing a long position, why they're placing a short position. Gamblers tend to be long and short on the same instrument, on the same asset class at the same time. So they'll buy the euro dollar for an hour, then they'll sell the euro dollar for an hour. Now, that can be defined as scalping, But if you look at it from a risk point of view, those traders don't really last because they don't have much of a trading plan they can rely upon, and it really gives them the ability to skew and do whatever they wish. You must have a bias, and you must recognize that the trend is your friend, as they say, until the bend in the end, to coin a very popular phrase. Now, when it comes to drawing trend lines, everyone will tell you to connect at least 2 major swing points, but most people won't tell you that you should draw this line from the right to the left, as it makes an incredible difference. Once you've drawn these trend lines in, you should adjust them to get as many touch points as possible. The more touches, the more likely your trend is to provide an accurate indication of key points on the trend. Looking at my NASDAQ chart right now, and you'll notice that I have 1, 2, 3, 4, 5 points, which creates my trend. Now over 3 and I'm in a trend, I've got a good trend going. Now you can see where that trend line has broken clearly sets us up for a new trend. Of course, that's now going to be a downtrend, but we've had a long-standing uptrend for over the last 5 or 6 months on the NASDAQ. In fact, longer than that, but the existing trend that I'm showing you on this chart and how that chart's been broken is about a 5-month trend. Now, to consider a trend line break technique, you should look for a break of the trend line if there's no strong price rejection. Now, obviously, there are potential buying setups when the market bounces and closes above the trend line. There are obviously selling opportunities when the market closes below the trend line. In addition, you can use trend lines to help your trailing stop losses and potentially capture more of the move. You notice, and you'll notice in other videos, I've discussed using a trailing stop to capture as much of the profit as possible, using the trend line to time that so you can look at swing highs and swing lows is going to be critical to your trading arsenal. It's important to note that you should make new trend lines for a trailing stop loss when the next swing low slopes higher, and then you should exit when the candle closes below the trend line. That's going to be important. So let's have a quick recap. So trend lines are critical for 2 reasons. Number one, they show you what bias you should have in the market, whether you should be long, whether you should be short. And secondly, it's useful for trailing stops, so you know where to exit your positions and when to capture more or less of the move. And thirdly, and as an addition, it's important to understand that when the market closes below the trend line, you should be looking to exit a position. When it closes above the trend line, if you're long, to hold on into a position. Now I'm going to jump on a smart chart. So I'm going to show you some of the tools we use to draw trend lines. Let's get in on that and do that now. I'm going to remove the trend line that I placed previously, we were just discussing with the NASDAQ. I'm going to show you how I draw it in. First of all, top right hand corner, drawing tool, trend lines, and here I'm just going to click on trend line. So I've got all of these tools available to me. I'm just going to go for a straight trend line. Now we start, as I said, from the right down to the left. This will give us a better trend. Not right now, it doesn't, but it will in a second. Then I'm going to adjust my trend to fit. Now, importantly, I'm going to remove this end so it goes right where the trend was broken. I want to know the point where the market was broken, but I don't want, let me just move this down, I want as many touches and as perfectly retrofitting this as possible. I think I'm quite close there. I'm happy with that. Now, you'll notice that where the market broke down is an important point, and I want to know that. Where the trend started is an important point, I want to know that. In smart charts, I can right-click the trend line, and I can show share date marker, and so I know that this trend started on the 2nd of October, ran to the 26th of Feb. That's when things broke through the trend. It's not when the market started to fall. The market started to fall a few days earlier. I can also right-click on this trend line, and I can look at show value markers. So that's going to show me the price at the beginning of the trend and the price when the trend was broken. So it ran from 7,416 up to 92.86. So we can see there's, practically 2,000 pip run before the trend broke. So that's giving me extra additional information. You can see I've got a number of touches on this trend line before it breaks. That makes it a solid trend. So up until this point, I'm going to be taking long positions if I'm a tech stock trader, which I am not a tech stock trader, I'm a currency trader. But it doesn't matter what market you apply this to, all markets are equal in terms of drawing trend line. As long as you've got over 2 or 3, most importantly 3 touches, then you've got yourself quite a solid trend and something you can rely upon. As soon as the market then closes below that trend, and when that happens, we know that the trend has changed, and so should our bias. So if you like this video, don't forget to hit like. If you haven't subscribed, get yourself on the subscription list already, and I'll give you access to more videos on this channel. And if you want to have access to the very tool I use, Smart Charts, if you look at the description of this video, there will be a link in there for YouTube subscribers, a special offer for you. You can get access to the very tool I'm using and start using it almost instantly. Up until then, I look forward to seeing you in future videos.